Are investors being too complacent to tariff risks again? Undoubtedly, you remember the market carnage that followed Liberation Day in early April, as investors had dismissed the threats of high tariffs only to be surprised by the administration on Liberation Day. Well, the extension of that deadline is August 1st, and it is right around the corner. And once again, markets are at new all-time highs, seemingly every day. And so it is reasonable that an investor would assume that markets don't care. Well, to a point they don't, at least not in the short term. And that's because markets do not think that high tariffs will be in place long enough to hurt the economy in the short term. Sure, we could see high tariffs on the EU or some other country for a few days, but most people assume they'll be negotiated lower. However, while markets are not concerned about this in the short term, they should be concerned about it in the medium and long term. Tariffs impact the economy over the longer term. And while tariffs aren't as bad as people feared back in April, they are much, much higher than they were in January. The average tariff burden for the United States now is probably somewhere between 15 and 20%, which is nearly double what most people expected it would be. Now, that hasn't caused an economic slowdown yet, but over the coming months and quarters, it very well could, and that's a problem because the market, at all-time highs, has allotted 0% probability to that chance. Bottom line, tariffs do matter, and we should not be dismissive of their risks. And so we should expect volatility in the back half of the year as tariffs continue to work through the economy.